Namaskar dosto, welcome back to the Stock Info. Today we are going to discuss one important subject in our episode 26. 5 investor mistakes that cost lakhs. Live in TCS Q1 FY27 results seasons right now. TCS down 36% in 2026. AI revenue is 2.6 billion. Order book is 9.5 billion. Are you making these mistakes? In our first section, we'll discuss the important thing, the genuine urgency. TCS results are literally 24 hours old only. Last night, TCS announced its Q1 FY27 results. Revenue up 13.9%, order book is $9.5 billion, AI business crossing 2.6 billion annualized, and yet TCS sales have fallen 36% in 2026. Right now, today, thousands of Indian investors are making 5 specific mistakes with this very data. Some are selling because the stock is down 36%. Some are panicking because the profit growth was only 4.6%. Some never checked the cash flow statement at all. Some have 40% of their portfolio in IT share alone, and some sold 3 months ago waiting for a lower price to buy back. By the time HDFC Bank reports on July 18th and invoices on July 23rd, if you know these 5 mistakes, you will make every result season decision differently. This is episode 26, 5 mistakes, everyone preventable, everyone tied a lessons you have already learned in this series. Section 2, confusing price movement with business quality. This episode 22 applied live, the most intellectually advanced lesson. Mistake number 1, TCS down 36% in 2026. Therefore, TCS is a bad business. This is the most common and the most expensive mistakes in equity investing. Let me show you what the business actually looks like. Revenue is up 13.9% year-on-year basis. Order book is $9.5 billion. This is revenue waiting to be recognized in coming quarters. AI business is $2.6 billion annualized and growing 13.6% quarter-on-quarter basis. Cash from operation is 93% of net income. The profit is real cash. The business has not fallen 36%. The price has fallen 36%. Remember our episode 22. Price is what the market is willing to pay today. Value is the business is actually worth, calculated from its future cash generation ability. TCS price fell because the market was pricing in a weak guidance and slow demand recovery. Whether the business value has truly fallen by that much is the question episode 22 DCF answers, and the investor who asked the question rather than following price is on completely different analytical level. Then the mistake 2, reacting to the headlines EPS without context. Short number 36, EPS surprise applied live, the most quantitatively priced lesson. Mistake number 2, TCS has missed the EPF estimates, therefore the result is disappointing. Let me show you what actually happened. TCS profit was rupees 13,349 crores. Analysts estimated it was 13,394 crores. The miss was 45 crores. On the revenue base, 72,275 crores. That is the miss of 0.6%. 0.06% of the revenue. Meanwhile, revenue beat as estimated by rupees 413 crores. AI revenue grow 13.6% quarter on quarter. Order book was $9.5 billion strong. From chart 36, EPS surprise tells you what drives the stock price movement on result day. It is not the absolute number, it is whether the result is better or worse than what the market already expected. A rupees 45 crore miss on 72,000 crores business with the revenue beat and the strong AI growth is not disappointing result by any professional standard. The mistake is reading the headline in isolation rather than applying the episode 25/7 check framework. Then the mistake number 3, never checking the cash flow statement. In episode 23, trap 1 applied live, the most practically actionable lesson. Mistake 3, looks only at the profit number and ignoring the cash flow statement. TCS profit grew 4.6%. Some investors said only 4.6%. That is slow. But let me show you what happened below the profit line. TCS net cash from operation was $1,310 million. That represent 93% of the net income. From episode 23 trap 1, if cumulative OCF is above 70%, the profit is healthy. If above 90%, exceptional. TCS scored 93%. The profit is almost entirely backed by the real cash. This is opposite of the trap 1 winning. The investor who checked the cash flow statement saw very differently picture than the investor who stopped with the profit growth. One saw slow 4.6% growth, the other saw 93% cash quality at an exceptional level. That single check, the one you learned in episode 23, completely changes the interpretation of the result. Live demo applying the episode 25 7 check framework to TCS for quarter 1 27. Now type tcs.com in a browser. This company website will open. Then go to investor section. Here go to financials. Then go to quarterly earnings report. You click on the quarterly earnings report. This screen will come. Now check the year is 26 and 27. Okay. Then the first quarter April and June. Then quarter 1 is correct. Now come this side. Click on Q1 26-27 fact sheet. If you click on this fact sheet will get opened. Now browse the fact sheet here. In the check 2, revenue is INR revenue is 720 to 750 million. That is up 13.9%. And quarter revenue year on year 13.39%, and quarter on quarter it is 2.2%. And then US dollar revenue up 2.7%, constant currency revenue 3.2%. Then come to the OPM, operating profit margin, it is 24%. Operating profit margin is 24% versus 25.1% in Q4 26. Then step 4, profit. Here you can see cash flow margin, cash flow from operation is 93% of the net profit. Okay. Then come down here, we shall go to the Indian reported as per our Indian accounting standards. So pass all these things, come down. IFRS we don't want. Then go down here. IFRS over. Now here as reported as per Indian AS income statement. This is the consolidated here. Now you can see total revenue is 72,275 crores against all the expenditure. Profit before other income is 17,317. Profit before taxes 18,612, and profit after tax you have come to 13,849 crores. Then go to balance sheet, check number 5. You can see the EPS, earnings per share is 38.28. Okay. Then check number 5, order book is 9.5 billion strong. Deal with SKF 800 million and landmark win. Now step number 7, check number 6, check trade receivables, that is account receivables for 30th June 26 is 58,352 crores. Then check number 7, management guidance for the con call given by K. Krithivasan said growth momentum continues despite headwinds. Step number 9, key insights. This complete 7 check analysis takes only 15 minutes for you. Please go through and analyze this in depth so that you can understand each and every points of the TCS result for the quarter 1. Section number 5, the mistake number 4, over concentration in one sector. Episode 24, portfolio diversification applied live here. Now Mistake number 4, holding 40% or more of your portfolio in IT sector in 2026. TCS fallen 36%. Infosys fell sharply. HCL Technologies and Tech Mahindra also under pressure. An investor with 40% IT allocation, even with the quality stocks, has seen significant portfolio impact. From episode 24, the 4-sector portfolio framework deliberately limits any single sectors to 30 to 35% maximum. And the chart 47 beta showed that IT stocks, despite typically having moderate beta, experienced amplified moves this year due to the global AI demand uncertainty. But here is important nuance. The investor who had 4-sector balance defensive, FMCG, growth IT, cyclical auto, rate sensitive banks, would have seen IT losses partially offset by the banking strength, pharma resilience and FMCG stability. Episode 24 did not predict the IT fall. No framework does, but episode 24 ensured that no single sector could determine the fate of the entire portfolio. That is what the diversification actually does, not an limit catastrophic concentration loss. Then the mistake number 5, timing the market instead of staying invested. For chart 46, SIP versus lump sum applied live. Selling TCS 3 months ago at rupees 2500, thinking you will buy back at rupees 2000. Two things happened. TCS fell to rupees 2047 on July 9th, very close to the target. But the investor who sold missed the 12 interim dividend. Record date is July 15th, 5 days from today. Payment date is July 31st. If you sold before the record date to buy back at a lower, you have now given the certain rupees 12% share to play and certain market timings game. From chart 46, rupees 5,000 SIP started today, grows at rupees 25 lakhs in 15 years. The same SIP started just 1 year late, rupees 22 lakhs, a rupees 3 lakh cost. Time in the market beats time in the market. The investor who stayed invested throughout the TCS fall received the dividend, maintained their cost basis and is now at a similar price to the one who tried the time entry without certainty, loss of the dividend. Market timing sounds logical history. The data shows it rarely works performance. The anti-mistake checklist plus action plan. The complete close. Every mistake has an antidote from the series. Every one of these 5 mistakes has a specific antidote from this series. Mistake number 1, episode 22, when the price falls sharply, run the DCF on the business. Has the value changed much or the price? Mistake number 2, antidote. Episode 25 and chart 36, apply the 7 check framework. Read revenue, OCF, order book and the con call. Never stop at the headlines EPS. Mistake number 3, antidote. Episode 23, check the cash flow statement for every result. TCS 93% OCF quality cannot be found in the income statement alone. Mistake number 4, antidote. Episode 24, 4 sectors, 15 to 20 stocks, no sector above 35% before result season. Know your sector concentration. Mistake number 5, antidote 46, chart 46, time in the market beats timing the market. Every year of the delay, every exit and every re-enter compounding, stay invested in quality. HDFC Bank reports on July 18th and Infosys 23rd. Before each result, run episode 25 check framework. After each result, check for any of these 5 mistakes in your own reaction. Comment below which of the 5 mistakes you have made before. Be honest, I reply to every comment. Every mistake I have seen cost Indian investors lakhs of rupees in 30 years of my commercial banking. Now you have antidotes, use them. Please subscribe, like, share with family and friends and support me for bringing more such good videos for you. And thanks for watching.